Hey everyone, James here. It's a Tuesday morning, quick rundown on the markets just to keep you abreast. I try to do these videos every day, so make sure to press the like and subscribe and notify bell. Straight into the charts then, I'm still short on the dollar index and looking for this to move down. As I said, we didn't quite reach the top Bollinger Band and this double top twin peak over here on the left. And in fact, we made a twin peak just above that recent swing high and we're moving down now. A little bit of a trend line and all the moving averages below us, the 100, 200, 50 and 20. So there's a fair amount of work to do for the dollar to work its way back down towards the bottom, down to about 96, and I think we can get down to 92. Break down through these levels, and let's go to the weekly chart. That's the 78.6% Fibonacci of the entire move up from the bottom, starting in January 2021. And that's actually at 94.6, but I think we could get a fraction lower on the dollar, down to about 93 or 92. As the dollar drops, we should see some buoyancy at least provided by that to risk assets, and hence I'm still long on a number of names. You can look at them on this page, and also long on the indices, German 30, NASDAQ, and S&P. Sharply moving up yesterday after Donald Trump said that this war might be ending soon, and after military success in the missile exchange seems to be going the US and the Allies' way. We've seen a follow-through of that today and a break up above the blue trend line, and we're now approaching the 50 and the 100 period moving averages. You can see my long positions here in the green arrows, and we're in some profit now. Same on the S&P. I pointed this out yesterday. We did follow the red path, but not all the way, only to the 200 period moving average here, not even down to the trend line. And we've bounced out quite sharply. I still think we can move up higher. A lot depends on geopolitics and generally what's going on in the markets in general. But I think the liquidity provided by war, massive liquidity, this is a massive military maneuver. And also QE seems to be, although maybe not officially announced, seems to be going on. So we've seen potential QE sneaking in, massive war spending, which will push assets up. And of course, looking at retail sales and the NFP jobs number last week, which were abysmal, there's every expectation that we might see rate cuts sooner rather than later, as the jobs numbers are bound to spook the Fed to some extent. Right, just on this page, without zooming in, Bitcoin, Ethereum, XRP, Solana, and some of these miners down at the bottom, all on a screamer today. So I have some longs within the bear flag, but I've also got longs much higher up, closer to 90,000. Those are all hedged at about 89. I think the plan here is to get up through the 50 period moving average up to the 100 and the trend line at about 81, 82,000. I think it's going to be really difficult to get much higher than 85,000. If we look at the futures chart, I'll tell you why. We've got this big empty zone, which I think we're going to try and fill now. There's almost no volume on the right-hand side here. We have a CME gap with the bottom just under 80,000 and the top. That was the level I pointed out to you on the other chart. So I think it'll be difficult to get above the top of the CME gap at about 81.5, and certainly very difficult to get above 85 or 84.5 as we enter the top of the empty zone and get into the very difficult volume zone on the right-hand side here. So quite bullish actually now until about 80,000, 81 maybe, 81.5. The CME gap, and with a bit of luck we could actually get to the underside of this shelf at about 85,200. Let's just go back to the spot price quickly over here at Coinbase, and you can see that 81,500 roughly is at the top of the trend line and the 100 period moving average here on the spot price. So I think that trend line is a very good area to aim for, and then potentially to go short actually, or at least hedge your positions. But before we get there, we've got to get through this last swing high at 74,000 and the 50-day moving average over here. But it's looking quite convincing, having broken up through the bull flag, retested the top of the bull flag and the support level just below there, and the 20-period moving average, and bouncing out today and last night. So that all looks quite good for Bitcoin, and the rest will follow suit. Now, gold and silver, I've just taken profit on the gold shorts. We got short at 5,330 and we got out at 5,100 and some change. So I've now got no positions on gold, looking to see what happens here. And either we're going to break down from this little tiny potential bear flag and get a bit lower, maybe down to 4,500 or 4,380. But it's possible that we'll hold here, the 20-period moving average, the trend line, very short-term one, and this purple support line, which represents the breakout of this ascending triangle, which is now acting as support. Let's wait and see what happens. I don't know. And so therefore I've taken profit. We'll wait to see what happens. It looks like we're going to try and bounce out actually. Now going to natural gas, I've just hedged this position. Here's the inverse head and shoulders pattern. There's the return to the breakout level. Remember, we got long at the bottom. We took profit at the top. I've now started rebuying around the 20-period moving average and slightly higher at the neckline of the head and shoulders. We've gone a little bit deeper than I expected, and on the retrace to the 20-period moving average here on the 4-hour chart and the rejection of the 20, I hedged the position, so I'm now fully hedged. I expect now that we might get an ABC wave, maybe a slightly higher correction, maybe not, I don't know, but something like this, driving the price back down through the moving averages down to about 2.89, 2.9, and potentially all the way back down to the bottom. Seeing as I'm now hedged, I'm waiting to see what this candle does on the 4-hour chart. It's about an hour until it rolls over. And if it doesn't move down and begins to move back up again, I'll unhedge and potentially add more size to the long position. I'm still fully hedged on WTI oil. I don't know what this is going to do next. I suspect lower, but we may have spikes up into this area. And I also expect that Trump and OPEC Plus won't want this price above $100. So maybe we'll faff around here for a while, retest the top of the gap, back down again, and that sort of thing. But I think generally we're actually going to head lower, back down to this purple line, which is the breakout level, and then decide what happens next. But overall, I think that we'll find that oil prices are going to be lower and not higher, and that we'll be heading down, either gradually, like I've suggested here, or very, very quickly if the market simply just rejects these very high levels, and potentially with a bit of influence from DJT and OPEC Plus. So basically now I'm fully hedged on oil and fully hedged on NATGAS, and I'm just waiting to see how these play out today. We could get long or short on either one of these, depending on how the price action occurs. Generally, though, I think natural gas is going to be more bid up than we are currently. In other words, a higher price than the current price. And I think WTI oil is going to be selling off. In other words, a lower price than the current price in the next few weeks or months. So generally, long on natural gas, short on oil. That's the idea. And now, of course, now that I'm fully hedged today, I can observe these markets, the 4-hour candles, candle by candle, and make decisions based on that with no bias directionally. Both could move either way. And then just to finish this off, we took profit on our long dollar rand trade, fortunately, yesterday. I mentioned this in yesterday's video, saying that we would try and aim for this level, but that we may take profit anytime soon. Well, I did that straight off the video. We took profit at the top there, and we're now out of this trade. That was a short. VIX has crashed back down again as the markets have rallied, as oil prices dropped. And of course, maybe we won't have an oil shock now. Bitcoin dominance rallying a little bit. You can't see that in the left-hand side, not important. But Bitcoin gold doing good stuff yet again this week and moving up after forming a reversal pattern. As Bitcoin dropped, so did gold. And back to the Bitcoin chart. Let's just see what's happening as we close off this video. Looking pretty strong. Everything looks good for the long cryptos for the moment. But remember, once we get into the 80 to 85,000 range, I'm going to be very, very cautious on Bitcoin. Take care and have a wonderful day. And on your way out, make sure to like and subscribe. See you soon.
Backwardation, backtardation, Katango Tango. Yeah, it's the swing trade nation. I'm up pre-dawn. Coffee in a chip mug, shippers half on. Floor shout aloud through a blinking screen, but I'm zen in the mess, keep the ledger clean. Goes up and down like a yo-yo pop. Stops, hit the rocks, watch the bottom drop. Silver lost the socks, bare feet on the street. I'm chill at my desk, steady tapping to the beat. If you follow the hype, you just ain't right. Chasing every flash in that late night life. They brag in the chat, every grab, every boast.